Does this mean that we could see some surprise to the upside when it comes to Chinese equities?
I think this is interesting, and again, this is where I always like to sort of go back to the end of last year as a starting point. We were all talking about reopening or the lack thereof in China, and then it happened. We saw a 60% rally in the market, and as other concerns have come through, we've seen that sort of come back off again. So it's always a question of what sort of sits in the valuations. There are a number of issues. We can talk a lot about what's happening in the real estate market, but for us, we think at some point you will start to see stimulus come into that part of the market, which is really going to make a difference, which is, around consumption. Might not be something that happens immediately, but with valuations having come back to where they are, it's, time to probably dust off and have a bit of a look at where some of those opportunities may sit.
Joshua, when we talk about this pressure on Chinese assets, are we talking about across-the-board sell-offs? Because we know that there are some sectors in the markets that are really heavily driven by government policies, such as EVs, clean energy, perhaps a lot to do with education as well. Are there some sectors where you could find more opportunities than in others?
Yeah, look, absolutely. Again, a lot of people are focusing on certain sectors, like things like real estate, for example. But if we look at certain places, like say, for example, in healthcare, where again is attracting quite a lot of political sort of attention at the moment. But, these are going to be good long-term stories. And as the valuations come down to, attractive levels, it's worth having a relook at some of those areas. Again, clearly China's moving from more of an investment, sort of capex type of cycle economy into more of a consumption one. And that transition is never smooth. But during that transition, and particularly as the market sells off quite a bit, there will be, opportunities sitting within that. Again, from our perspective, it's not always just about, what's happening, about China. There's a lot more to Asia, than China. But, we do see some opportunities in there, post the pullbacks that we've seen.
In terms of some of the stimulus that we've seen in China so far, do you get a sense that it's a little bit piecemeal and that some of the moves, such as, cutting the repo rate, cutting the MLF, is sort of the wrong answer to the wrong question? Is cheap money really the problem in China? And what more needs to be done to stir the animal spirits?
Yeah, look, I mean, I'm not a policy expert, so I'll leave that to the policy experts. But, I mean, what we, would like to see is, again, we're trying to find where we think there are companies that have good long-term prospects at good valuations at the moment. And, we want to see that move to China becoming more of a consumption-led economy. Now, clearly, at the moment, there's a lot of, negatives around in the economy, and people are feeling those animal spirits are quite low, and that's reflected in the valuations. So we would like to see, more targeted things in consumption, which will be the next wave of, what's going to drive the Chinese economy. We can talk a lot about real estate, but again, that's more of a looking backwards rather than a looking forwards perspective. So, yeah, we haven't seen, and again, clearly the market hasn't seen anything that they're, they've got really excited about yet. And the real estate market does need to be, I guess, calmed, for lack of a better word. But it's really those moves that we're likely to see that provide things for more stability, make people feel more comfortable with their job outlook, etc., and sees the consumption come back, because that really will be the next story for China.